And what correlations, if any, there are back to 1999, which you know better than most, considering you sold your company in April of '99 for $6 billion and collared it and became the Mark Cuban we all know now. How are you thinking about all this?
So I think one of the fundamental issues with the market right now is no companies are going public. You know, there isn't, back then, you know, Amazon was a new company. Dell was relatively new. You know, there were incumbents that we all looked at as being, you know, the default powerhouses. But there were new companies coming public that we can look at and say, okay, maybe these guys have something unique. I mean, if it was today, Google probably would not be public. Amazon might not be public. You can go down the list, and there are companies right now that are up and coming in the AI space that are private. And because they're private, nobody gets to invest in them, or at least, you know, typical investors don't. And you don't really get much conversation about them. And I think that impacts the conversations and the market movements that we saw yesterday and today.
Do you think it's going to change? Does this open the door to more startups because of what we witnessed from DeepSeek, the way we sort of think about these open source models, the way that, you know, maybe the incumbents are suddenly put on the defensive, so to speak?
Yeah, it was interesting because you mentioned earlier about an arms race, you know, the Metas, the Amazon, OpenAI, all just spending just billions of dollars. And that really reduced the competition because it sent the message that, hey, you've got to raise all this money just to play the game. Now with DeepSeek, the door is open. And actually, the door had already been open for smaller companies that were, you know, like company Grok that does an inference processor. The door has been open, but I think it's open wider now. And you'll see more companies get more visibility. And I think with the new administration and the changes at the SEC, I think there's going to be an incentive and a push for more companies to go public. Because the reality is it's not a stock picker's market anymore because, you know, the number of public companies continues to decline.
When you watched the sell-off yesterday, as an investor, I don't know what you're, you know, invested in today in terms of public market stocks. I think you've gone through gyrations over the last, you know, 5 to 10 years of being heavily invested in the U.S. stock market and then perhaps not so much. I mean, how does that look today?
Well, you know, I had gone to cash because I was concerned about tariffs. I was concerned about the uncertainty. You know, how high can this market go? And so when yesterday hit, I certainly took a look and said, okay, is now the time to dive in? And is this just an aberration? And I just don't get that feel. There, like I said earlier, there aren't those up and coming public companies that you can say, look, this just opened the door for them. Let's jump on board with them. I think there's so much uncertainty still on DeepSeek. You know, is the information we got in terms of their cost to create the models accurate? I mean, it's still too early to tell.
Mark Cuban has a huge announcement to say about Nvidia. He thinks Nvidia might have caused some great market turbulence that will lead to a recession. Even though the stock is surging back to its past numbers, Mark Cuban thinks this is temporary unless Nvidia does something drastic. Key figures in the investment community, like Paul Franke, have expressed caution, suggesting that Nvidia's future could mirror the downturn experienced during the Great Recession. With shares down roughly 9% since January, there's a heated debate. Is this semiconductor giant heading south, or is it merely the calm before a rewarding storm? Welcome back, everyone, to Investocracy.
On Sam Altman, I'm not sure how well you know him, how much you might know about Open, but the idea that now, you know, he's talking about, wow, this is really an incredible model. It's going to force us maybe to be better and earlier in how they introduce some of their new features as well. I mean, it really feels like, Mark, this was a goalposts moving moment for AI and how we're all going to relate to it as investors. Do you feel that way too?
Well, it certainly has been perceived that way. I mean, I think it's still too early to tell. You know, I try to geek out and learn more about mixture of experts and the way they're doing their models and all that stuff. So, you know, I think it's still too early, but I think what really changes is it's not just a race to raise as much money as you can in order to be a player. And it also impacts regulation. Because before, when we talked about AI regulation, the presumption was all these companies, the Metas, the Googles, et cetera, OpenAI, they were so big they needed to be regulated because there really weren't up-and-comers that could disrupt them. Now, if all this plays out the way it appears to, the message is, bring on the 12-year-olds, bring on the disruptors who can come in here and change the AI game. There's an old saying, when you run with the elephants, there's the quick and the dead. And we finally found somebody quick who can run with the elephants. And now the question is, can the elephants run with the quick companies like DeepSeek? And I think you're going to see a lot more entries into the AI space. I think you'll see a lot of more private investment into small up-and-coming companies. I can't tell you how many conversations with private companies I've had, and now, it turns out I was wrong, where it was like, well, shoot, you're going to have to raise billions and billions of dollars just to compete with these guys. Now someone can walk in. I had a conversation with a company last week where we were talking about, the thing with TikTok is their algorithm, and they wanted to do algorithms as a service and build models so they can license what they think will be a better than TikTok algorithm to any social media company or other company that wants to use it. And the question was, how big a model and how much of an investment do we need to make? That all just changed. And so I think you'll see a lot more companies get funding that otherwise might not have gotten it because it won't take as much money to compete.
Interesting. I so very much appreciate the fact that you were not only watching the debate and discussion that we were having, but that you were willing to be a part of it.
As the world anxiously watches trade tensions play out, Nvidia seems to be the canary in the coal mine for semiconductors. With international trade disputes casting a long shadow over the market, the industry's tremors have resonated globally, much like a ripple effect turning into a tidal wave. Paul Franke warns against the looming economic contraction spurred by tariffs and restricted federal spending.
And a potential growing threat to Nvidia's dominance as the AI race shifts to an inference versus a training phase. Hyperscalers, we know they are developing their own in-house AI chips to bring down costs and reduce their reliance on Nvidia. It's notable in this Gemma release that Google says its TPUs, its custom in-house chips, can achieve what GPUs can. And the worst kept secret in tech is that Anthropic widely uses Google Cloud and thus their TPUs for the majority of their inference. Amazon, too, has been making inroads for its Trainium chips through its own investment in Anthropic. This week, Meta began testing its first in-house AI chip. And of course, OpenAI has big ambitions here. It is pouring resources into developing its own as well. Startups are also gaining traction. Cerebrus's specialized AI chips, they're powering Perplexity's Sonar model and Mistral's chatbot. All of this raising questions over NVIDIA's dominance in this next phase, and questions over its margins, which is really amazing for a hardware company if other options are finding more efficiency and able to offer sort of better efficiency, lower costs. Now, NVIDIA, of course, you'll hear this often, it is an ecosystem, and Jensen Huang says its chips are just as powerful for inference as they are for training, but the economics are shifting. And even as spending from the mega caps remains elevated, Project Stargate promises hundreds of billions of dollars in data center spending. NVIDIA's share price is telling us a different story. It's certainly rebounding today, up nearly 6%, but it's down 15% on the year. Next week's GTC, guys, that will be crucial to the narrative. And, one of the number one questions on people's minds is, how they compete in this inference phase where there's a lot more competition.
Franke equates Nvidia's current plight to the precarious setup before the 2007 Great Recession, cautious that a similar steep decline could be on the horizon. Franke paints a picture of a bubble stock on the brink of bursting, driven by investor hesitancy over a forward price to earnings. Multiple postulated as a best-case scenario, yet unrealistic in a downturn. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
For clients that had a lot of cash, we've been selectively putting our toe in the water. Names that we're adding are names like Nvidia. We've been adding Nvidia on this re-rating because it's become meaningfully more attractive from a price standpoint.
Look, I don't think anybody's crazy enough to stop the supply chain for semiconductor chips. And I don't think there'll be heavy tariffs on it, particularly when they talk about investing. But they've got a queue that are people waiting for capacity, We hear NVIDIA talk about that all the time. So to me, this stock is very undervalued here.
19
That's why I bought more.
times.
Yeah. And I don't see, by the way, I don't see where NVIDIA is trading at 90 times next year.
Yeah.
It's still significant.
It's
like
24.
25.
Yeah, but he was talking about
Next year, I'm talking
26.
Yeah, that's what I'm talking about.
You know, these guys.
We've seen the markets come back in, and I have to tell you, we were buying some yesterday because now you see NVIDIA at 18 or 19 times next year's earnings. Now you're getting paid.
The current state of Nvidia, emblematic of the industry's challenges, is an intriguing complexity of bearish caution and bullish optimism. With analysts rallying behind it, Nvidia's technologically sophisticated portfolio appears promising, despite economic headwinds suggesting otherwise. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.